So, de-risking a trade and implementing take profit levels along with stop loss orders are definitely essential for us day traders to manage risk and maximize profitability. And we're going to talk about why that is. So, for starters, risk management is the main thing that we're going to talk about here. So, day trading obviously involves significant risk due to the volatile nature of these financial markets that we're trading, especially crypto. So by implementing stop loss orders, we can limit these potential losses by automatically exiting a trade if price moves against our position beyond a certain level, obviously. So as you can see here on the right, I have a entry, I have a target, and I have a stop loss order, okay, which is set to 25779.6. So obviously, if price were to come in and then take me out of the trade, it is what it is. I'm not going to keep moving this stop loss down and down and down in hopes that it will turn around on me and hit my target. That's foolish thinking, right? Because you already calculated the risk at 1%. So if I have a $10,000 account, if my level gets hit here, I lose $100. Plain and simple, right? I lose $100. Whereas if I keep dragging my stop loss down to here and then down to here and then down to here, 200, 300, 400, 450, you're really hurting your account by doing so. That's not something that I ever suggest that anybody that's following my lectures to do. Okay. We should never, ever move the stop loss down unless there's a really, really good reason to do so. We should only ever move the stop loss into a profit-like position. So if I have a short trade and I'm planning a short trade on these highs, meaning that I think that price is going to do something like this and then come down to, say, this box right here before taking that low, then the idea is I should never be moving my stop loss above the original stop loss, right? I should never move it that way, but I am allowed to move it this way into profit. You really have to set this rule for yourself, right? Once you move that stop loss, you should keep it where you have it. Obviously trying to get it into a profit as quick as you can without overdoing it. We'll be talking more about that in a few minutes, but we don't want to develop a really bad habit, okay? Because I've seen many people develop this very bad habit where as a newer trader, they're throwing their stop to break even and it just becomes a nightmare, but we'll get to that. So obviously capital preservation is crucial for us day traders as well. Having a stop loss order ensures that losing a trade doesn't deplete a substantial portion of our trading capital, which allows us to continue participating in the market and taking advantage of new opportunities. I could not tell you guys how many times I've seen people go all in or pretty much close to it and letting their liquidation hit them, all or nothing kind of liquidation kind of level. If you want to trade that way, you're welcome to, but from a risk management standpoint, unless you have an actual plan as to why you're doing that, it's not very bright to do so. Okay. Some people like to do that and risk the 1% all at once. That's fine. Get that. I understand that. But, throwing your whole account balance into one trade without a stop loss, it just doesn't work too well for most people. Emotion control. So as we know, day trading can be emotionally intense, especially when facing losses and seeing your profit go red, meaning that you're not making money, you're in the red. Setting these stop loss orders helps remove the emotional component from decision making. So we traders naturally are less likely to make impulsive and irrational decisions when a trade goes against us, when we have a stop loss. Okay. Consistency. Having a set of rules for placing stop losses and take profit levels adds consistency to our strategies, to our plan, to our approach. Consistency is an absolute key to developing a successful trading strategy over the longer term. If you're in this for the long term, you're going to want to be consistent. There's no ifs, ands, or buts about that. You need to stick to something. Profit targeting. So take profit orders allow us traders to lock in profits when price reaches a predetermined level. So for this exact example here, perhaps my idea is that this is a take profit 1 and this is a take profit 2. This prevents traders from getting greedy. So we don't want to get greedy and say, oh, it's all or nothing. We have to hit this level or we're not taking any profit from this trade at all. That's a very bad habit. And unless you're really advanced at trading, you should never look to do such a thing, especially on a very elaborate move like this. If I were to measure this kind of move here, I have a 10.79 risk reward multiplier, meaning that I'm risking 1% to possibly make 11%, roughly. That's really a reach. Unless you really know what you're doing, you should not be reaching like this, okay? This is shooting for the stars. This is not being consistent. And it's not the way that you should be going about profit targeting. So obviously, if you get greedy and you hold on to a winning trade for too long, then what could happen? Price could reverse and basically erase any of those gains that you had. That is hard to take. Okay. That is very, very hard to take emotionally, to see yourself in a massive profit. You have not taken any profit. And all of a sudden you go get a shower, you come back and you actually lost the trade. Maybe it hit your stop loss. Ugh, yikes. You don't want to find yourself in that position because it will haunt you. It will eat you. You will try to do foolish things to make that happen again. And it's just a really bad place to be in. Okay. If it happened to you, okay, you just have to move past that, right? Really think of what you're doing when you trade. Have a solid plan. Don't let that happen again. If you see something, when you go through the course, you'll have more market structure lessons and you will be able to understand when it makes sense and when it doesn't make sense to exit a trade. But definitely watch your structure. If you see structure flip against you, that's it. Game over. I'm closing that trade. I don't care if it did not hit my take profit level. I'm taking a profit right then and there. Time management. So we day traders operate within a short time frame and we need to make decisions very quickly. Having these preset stop losses and take profit levels, they help us manage our trades efficiently without constant monitoring. We don't have to sit here from daylight to dark, 12 hours a day or more, like some people do, but we don't have to be those people. I'm not one of those people, right? I set my alerts, always setting alerts before my take profit level, before my stop loss, near my entry, so I can monitor what's happening, right? We don't need to sit here all day, every day when you have the ability to set alerts in TradingView and we have these predetermined levels because they should make us feel more safe about everything that we're doing, okay? Risk reward ratio. So obviously implementing both stop loss and take profit levels enables us to calculate our risk to reward ratio before entering a trade. Whereas if you did not conduct a trade like this, how I'm planning this trade, then quite clearly, you're not going to have that proper risk reward ratio calculated. You don't even know what you're making. You don't even know what you're risking on this trade. You're guessing, right? This ratio helps us assess whether a trade is even worth taking. Is it worth it or not? 11%, I think so. Even if I split the trade 50-50, I'm still making probably at least 7 or 8%. And if I cut half out on this X and cut half out here, I'm making a decent portion still. So minimize overtrading. Overtrading can lead to unnecessary losses and burnout, right? Having a clear stop loss and a clear take profit or take profits, plural, helps us traders stick to a trading plan and avoid making impulsive trades based on short-term market movement. Objective decision making. Placing stop loss and take profit orders removes the need for constant monitoring and decision making, as I mentioned, right? We can execute the strategy without being influenced by every single tick and price. So incorporating these strategies into a day trading plan helps us traders strike a balance between risk reward, reduced emotional involvement, and increase the likelihood of consistent profitability over time. It's important to note that no strategy obviously can eliminate all risk. There's no such thing as being 100%, but proper risk management can absolutely and will absolutely significantly improve a trader's chances of success. You can't beat this game unless you follow these risk management rules and guidelines. There's no ifs, ands, or buts. Either you do or you don't. If you don't, you're not going to get far. Okay, you're not going to get far. I'll tell you guys that. You will not be successful in the long run. So in terms of de-risking a trade, in my opinion, we should always look to de-risk a trade as well when the opportunity presents itself. Okay. This, of course, would go hand in hand with the things that you'll learn later on in the course. For example, market structure, supply and demand, and liquidity-based concepts and strategies will be used alongside current price action in a live trading environment to better project when it makes sense to de-risk a trade and put one stop loss to break even or potentially into profit. I myself always aim to play on the house's money. You may have heard me say that before. Said that quite a few times, meaning that I will, when acceptable, always put my stop loss in a place that I can take as minimal of an impact to my account balance should the trade turn the other way against me. For example, if I take a long trade and it just so happens that price pulls away a few $100s on Bitcoin, I'll put my stop loss to break even. I'll take a slight profit, maybe, 10, 15, 20% of the notional size of the trade. And that way, if the trade turns against me, I won't lose any money, including fees. Obviously, you're going to have to do your own math on this. Every exchange fees are different, obviously, and everybody has their own VIP level on different exchanges. Okay, so make sure you do your own math. I highly suggest not rushing into putting a stop loss to break even either. This is a very bad habit that many people find themselves doing as newer traders. And what happens in turn is, unfortunately, they get into a trade and within minutes or even seconds, they place their stop to break even. Price pulls away even like $20, $30 on Bitcoin. That's the worst habit you can find yourself in, because what will end up happening, even if their idea made sense, they'll get stopped out of the trade, price will pull away, and they'll be mad. Why are they mad? Well, because the trade ended up working. Everything ended up going as planned. The TA made sense. They just happened to screw the whole trade up because they put their stop to break even too quickly. So what I'm getting at is you must stick to what market structure is telling us. This will all make way more sense, obviously, as the course progresses and you go through future lessons. But you have to stick to that when I'm teaching you guys throughout this course. Quickly, I'm going to go through an example here of de-risking a trade. Obviously, this may not make a whole lot of sense as to why I'm longing here and why I'm targeting these levels to many folks, especially newer folks, but that's okay. You don't need to understand that. I'm just going to show you my mindset here as if I'm going through a live trade, okay? So first thing is I'm going to try to talk very simply here without a whole lot of complex strategies. Very basic idea, but I will have to talk about market structure, okay? So hopefully, if this doesn't make sense, you can go back to this end example later on after watching the market structure series, and then it will make sense. Okay, so price went up to here, breaking this bearish trend. So shift upwards. So we have a higher high. I'm looking at a higher low potentially for a higher high, maybe just an upwards trend towards my take profit level. Very simple idea, nothing fancy at all. So I set my limit order and pretend we just got hit on the limit order, okay? So price is pulling away. I hit my first take profit. I closed half my Bitcoin out. We'll say I closed half of it out. Unfortunately, I can't do that on TradingView. I should have went back and bought 2 Bitcoin here. I forgot about that, but that's okay. So pretend that we have a 0.5 Bitcoin remaining. We took 1 take profit out. Okay, fine. I don't really see a whole lot besides bullish price action, but what should we have done right away after we seen price pull away here aggressively? What's the first thing that I should have done that I didn't do here? Well, obviously put my stop loss to break even. The second that structure broke here from an internal standpoint, which is something, again, you'll learn later on, we could have put our stop loss to break even because it pulled away so aggressively. I wouldn't have done it right away, meaning that by the time you had this candle close, I wouldn't have just put my stop to break even. That's foolish because price would have come back, taken me out just to bounce away. See that? See how it bounced directly on my entry line? Isn't that something? Right? That's not cool. So that would have taken us out before the pump. So obviously, incorporating a plan with de-risking a trade makes more sense than not. So in this case, we have the stop loss to break even. If we don't hit that target, that's fine. We're going to pretend that we got a little bit greedier with this, and we're going to shoot a little bit higher. Let's shoot for up here. Okay, maybe we decided, nah, that's not good enough for us. We want to go a little bit higher on this long. We're going to take it up to here now. Okay. Now notice how price decided to retrace down to here. Okay, that's very important. Pay attention. And then it came up, made a higher high. It almost hit our take profit level. It didn't quite hit it yet. And then what happens? Oh, and then the trend shifted back to bearish. Now we have a trend shift bearishly. What am I doing in this still? Am I going to be dead set on this level now? No, because I'm smarter than that. I know that this makes no more sense, and I will sell. Even though my profit figure is not as great as it was up here, I had a clear as day indication. I'm following a clear as day plan that tells me, hey, snap out of it, Phoenix. What are you doing in this trade now? There's no reason to be in this trade anymore. You can find a new trade, take your money, and get the heck out of the market when price allows you to. What I could have done is I could have moved my stop loss into profit here as well, underneath that line, so that I got taken out directly at that time, okay? by the time it broke structure. Sometimes that's a good idea. Sometimes it's not. Why could it be a bad idea? Well, because price may have only wicked that level and may have not closed below it, right? Well, again, that's stuff that you'll learn later on. So I hope that example made sense on how a basic way of de-risking a trade. As the course progresses, you will see more on de-risking. Okay, it won't be in the risk management section per se. We're going to make it in the altogether section, or maybe be a different series on its own.